is called into the surface of that very. Mhm. Mm. That's interesting. Okay. Uh, mm. Oh. Uh, uh, that's that's not even. That's not. At this point. Hey, yo, what's up, investors? Here? Man, I don't get that right there, dude. I really don't get that. I don't get that at all. I don't get that. Don't get it. I don't know, man. Oh. You gotta love the random bounces. Mm-hmm. Man, just so much information to look at, man. It's just frustrating. It's frustrating. Okay. Touch me. Man, I don't know, man. I don't know. Shit, I don't know. I don't know. I don't know. Oof. Mm. Hey, what's up, Tony? I'm glad somebody was in this short. Seems like the whole market is short right now. Yeah, you said that you was down 1,600 across all your accounts, right? Mm. Oh, so you made double the amount that you lost? Congratulations, bro. Glad that you was able to make that money back. I'm definitely having a hard time. Again, it just seems like it's having a hard time. Don't know why. Okay. Okay. Mhm. Hopefully it doesn't continue, man. I mean, the mother boxes have been destroyed. How will you retrieve your great? You got all these tools and yet you still find a win. That's what's amazing. Still find a way. Even with all these tools. So just imagine what would happen without these tools. Mm. Mm. I like to use the wings or not. Oh man. Oh man. Mm. Yeah, probably. I don't expect it to be perfect, but oof. Mm. Yeah, it's just uh, oof. Wouldn't that be some shit? Pretty sure I'm pretty sure. All right. Yeah. Mm. Okay. I probably have to further categorize this because it is a pattern. It is a pattern though. Don't trust the news move. Mm. Or I guess it only works when you don't take the trade and everybody else does. Mm. And the stair steps its way right back down. Okay. That tells me. Mm. damn, dude. God damn. Mm. 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 All right, man. I mean, they already used this area, so I think that they go down a little bit more. Mm. Okay. All right. So if it does 29. There's always something, right? Always something. Always something. Always something. It's always something. It's always something. Yeah. Okay. Well, mm, and to like his bounds, and we will stop nothing. Mm. And, honestly, I really, when it comes to like the, I guess the fundamentals of gold, I'm not sure. When a variable is not consistent, I do not take it into consideration. I mean, sometimes the dollar and gold, I mean, they're supposed to be opposite of each other, decorrelated. If one is going up, the other one is supposed to go down because of the relationship that they've had or that they have. But sometimes the dollar will just sit there and chop, and gold will pump and dump or whatever the hell is going on. So usually, if the data is not consistent, then I don't consider it. Um, but I am identifying a pattern in gold, and I'm gonna keep that in mind next time when I take the trade, because I'm starting to see that whenever there's like a news pump, and this is probably true for the Nasdaq as well. When there's a news pump, they give back the entire move. And I shouldn't be looking for continuation bounces or something like that. Uh, if it's like a news event, then once it breaks structure, I should try to look for, I guess in this situation, I should have looked for selling opportunities, because I guess all the hype was gone from the Trump news. From the Trump news pump. It does look like this thing will continue to trade lower though. Nasdaq too, because I'm looking at Nasdaq on my other chart, and with that rejection at around 369, it does look like the market wants to continue down lower. I do see an area where the market could potentially bounce, potentially around that 200 level on 207 on the Nasdaq here. Could see a bounce at 207. 175 will be a follow-up area that I will look for. So 207 and 175 are the two levels. Yeah. Yeah, but this type of price action, it makes you want to just start to, or it should, at least for me, I guess I should say that. Just makes me want to just jump into something, honestly. Like none of this shit worked. I mean, I do it in real time. Like none of it worked. At least that's how it feels. Well, Just have to start facing it head on there. Hmm. $568. I mean, that'll be a straight gamble. That would be a gamble. And then you got those equal highs right there, and that'll be a gamble. Well, okay. Man, look at the Nasdaq go. Look at the Nasdaq go. I mean, I don't know. I really don't. And I don't know why that. I don't know why. I don't know why. That just would have like it little. It would have ticked me out. Fetching sports data. Hmm. Fetching sports data. Mm-hmm. Okay. All right. Hmm. Yeah. I don't think so. Oh shit. Oh, I was doing this in the hard way this entire time. Still not the hard way. And I could have just been doing that. Interesting. I guess you learn something new about like the small little things. Yeah. Of course. You know what, Tony? I hope so. I hope so. I hope so. Okay. Well, I mean, I really gotta go. I feel like I gotta go back to the drawing boards. That's why it feels like I have to go back to the drawing boards because I am not getting the results that I want completely. I'm not getting the results that I want lately. I guess I was too early on this Nasdaq move. And well, I mean, I traded at that range, but this is why, like, sometimes I just don't have an interest in trading the Nasdaq because of this. It swipes the range. It goes into, I guess, I mean, this, I guess you can consider this a range, I guess. I guess. Yeah, I guess it is a range, yeah. Comes up into this area right here. I was looking at this area right here. Just looking at that area. So I'm guessing that it'll probably come back and use this area for a short. Because that's how the Nasdaq rolls. Man, look at that. Look at that drop. Nice. I guess this is what when you set alerts, so you're not in front of the screen all freaking day waiting for the market to chop around and get to the level that you want to participate at. That's not likely to happen. Yeah, it's probably likely to go at 215. It's probably likely. Interesting. Okay, I mean, it's just I guess let me just really look at this. At least on the Nasdaq, we got the big move down. The bears held it. They took out the low. That must have been what they was looking for, because we got the push right back up into supply. We have them selling again. And we're looking for a continuation to take out potentially that low. Okay, let me look at this. Let me look at the Nasdaq. So I turn. Okay. Ah, shit, my bad. My bad, guys. I forgot. My bad. I forgot about Powell today. I forgot about Powell. Damn. Okay. Forgot about Powell. Oh, well, I only got like 15 more minutes. Man, what a day, man. Tom Schneider in Penny.
Of like political tensions between or cooperation between the Fed chair position and the administration. And I wanted to ask you, how do you still keep the public's trust this way?
By sticking to our jobs and doing them well. Ultimately, if we deliver the maximum employment and price stability, or at least are seen to be doing everything we possibly can as we meet various shocks and multiple supply shocks in recent years, the public keeps its faith in us. And if you look, we look at things like longer-term inflation expectations, and you'll see that they've remained pretty well anchored right through all of this. So if you really think inflation is going to be higher, you can make some money betting against that. But people don't do that. The people who are putting their money to work in the financial markets, not to give too much credit to that, but that's it. If we stick to our knitting and we do our jobs, we stay out of politics, stay out of the hot political issues of the day, and just do your job and keep your head down. I think, I see this through my dealings with elected people. If they get the sense that you're not there to deliver talking points, you're there to listen to them, and you're really somebody who's committed to doing your job and sticking just to that job, and that's all you want, and you're not going to get into politics, that's what we need to do. And I think generally, I think we are accepted in that spirit in Washington, and I think generally around the country as well.
Jason. Remember to tell us your name.
Thank you, Chair Powell, for being here. My name is Jake. As you know, your term ends in May, and a potential successor, Kevin Warsh, has indicated a desire to cut rates if he fills the role of chair. What is your take on the effect that a cut would have on the flexibility of the Fed to remain well positioned and maintain both sides of its dual mandate, particularly given the fact that inflation has remained elevated above the Fed's 2% target for several years now, and progress is further halted by the oil shock and tariffs especially?
Jake, that's not something I'm gonna swing at, that pitch. Is that a Red Sox jersey, by the way?
I called on him.
Yeah, okay. I know this must be Red Sox country.
So we're going to go to the balcony next.
Hi, my name is Eamon Candido. So earlier you said that you don't know how much you believe in something until someone tries to take it apart. So my question was, what's the thing you currently believe about the economy that you're least confident in?
Interesting question. I'm not going to give you a particular individual thing at the moment, but I will say that I would say this, and of course this is self-serving to an extent, but having worked in the private economy for most of my career, I don't have any predisposition to believe that models can really capture it, because so much of it is animal spirits, as Keynes called it, and also again, I go back to the weather. Will we ever be able to predict the weather with any precision three months ahead, other than the seasons? So the economy, no one has been able to really successfully predict the economy. So I think the temptation is always to place too much sort of stock in in models or in one particular outlook. The other thing is, which is a big takeaway, is about fat tails, right? So famously there's a normal distribution and the tails are what they are. It's not a normal distribution. The tails are fat, and however fat you think they are, they're fatter than that. The possibility for the economies at any given time is so much broader. For example, the pandemic inflation. We'd spent 15 years with the inflation below target, and that was at a time of QE and lots of fiscal stimulus and that kind of thing. We had inflation below target, and people, pretty much the profession had, the big problem the whole profession was trying to solve was, how do we get inflation up to 2%? That was really the problem. And then along comes the pandemic inflation, and bang, suddenly you have a 40-year high inflation. So it's hard to keep your mind open to just how broad the possibilities are.
Hey, down here, yes.
Hi, my name is Robert. Thank you so much for being here. I'm a first year studying econ, math, and philosophy. So many economists that I've listened to, at least retroactively, say that what we really needed during the COVID pandemic was around $3 trillion, and the government printed something along $6 trillion more than that. And so inflation rose, but that money is still out there. So if rates come down, obviously you took initiative and you raised them very significantly. If rates get lowered again to, let's say, 2% or so, do you think that the price spikes have already played out, or do you think that all that extra money being out there will, on top of, instability geopolitically, do you think that's going to push us back into an inflationary spiral? And then also I was wondering, for your next press conference, are you going to start it with good afternoon or hello everyone?
Let's talk about that later. So, sorry, the first question was
the expansion of the money supply.
Yeah, no, so I think monetary quantities are a very challenging way to try to think about inflation and the economy. There was a time when the profession thought that, monetary quantities and inflation were tightly linked, and of course, in an abstract way or in a simple model, it makes sense. If you don't increase the amount of goods and you double the amount of money, then the price has to go up. But there has been relatively little correlation. And my story of the pandemic inflation would not be about monetary quantities mainly. I'm not saying it might not have played a role. It was more, you did have a lot of stimulus, particularly in the United States. At the same time, we were looking at the possibility of another Great Depression. We didn't know whether there would ever be a vaccine. We didn't know what this was going to be. How many millions of people was the disease going to kill? So literally, for the first time probably ever, we're looking at little alternative simulations that are a Great Depression lasting many years. So we did a lot of stimulus. And then when the global economy reopened after shutting down, you had this burst of demand, red hot demand, and constrained supply still. So automobiles is a great example. Everybody wanted a car because they didn't want to take public transportation, and they'd all moved to the suburbs and out of the city. So I need a car, and yet you couldn't make cars because you couldn't get the semiconductors. So you're looking at a vertical supply curve. So a little bit of demand drove prices up a lot. Then, of course, we took the view, my colleagues and I did, that a vertical supply curve works both ways. If a little bit of demand could bring that price right down, and also it won't be vertical forever. It'll start. You'll get supply side healing. You got those two things. It was always both supply and demand for me, and you got inflation coming down very sharply in 23 and 24. We got close to the end of your question. We got pretty close to 2% by the end of 24. Now we were just dealing with the effect of tariffs, which have largely fallen here in the U.S. and not abroad. They've been less than expected because the other side, others didn't retaliate, and also because what was implemented was less than what had been announced. Nonetheless, that was the piece. We were at about 3% inflation, and somewhere between 0.5 and 0.8 of that is from tariffs. So we've been pretty close to 2% all this time. Now we have another supply shock coming. It's one of those times where you get a series of supply shocks. First the pandemic, then the much smaller one from tariffs, and then we're getting now an energy shock. No one knows how big it will be. It's way too early to know. As I mentioned, we do think our policy's in a good place for us to wait and see.
So one last question.
Hi, Mr. Powell. I'm Lola, and I was wondering at what point does the size of the US's debt break the point of natural systems repayment, and if that's something you're worried about now or something you think our generation should look out for?
I don't think we know what that number is, a sort of ratio of debt to GDP, where it would be a problem. There are, of course, Japan being a great example, there are countries that have much higher levels of sovereign debt to their GDP than we do. What's clear is that our debt is growing much faster. The federal government debt is growing substantially faster than our economy, and that ratio is going up, and in the long run, that's kind of the definition of unsustainable. The level of the debt is not unsustainable, but the path is not sustainable. And so it's really important that we get back to, we don't have to pay the debt down, we just need to have primary balance and begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job, of course, and I pretty much limit myself to those high-level points which essentially everyone ignores.
So we're going to thank Chair Powell, but let me just describe the sequence of events that now follows. So first we'll thank Chair Powell, then anyone who wants to is welcome to join us on the stage, and we'll take a group photo with Chair Powell. Because of a tight schedule, there can't be any selfies, because if there's one selfie, there's 600 selfies.
Right.
So you'll need to make do with one photograph of the entire class with our esteemed guest. But before we do that, please join me in warmly thanking Chair Powell. Now, come up on stage.
Okay. All right, guys. I'm out of time for this session. It looks like I should have traded the Nasdaq today, but I was over there on gold. So I'll just kind of keep my eyes on the Nasdaq more often. I'll hop into the sim account and probably take a trade because, like I said, I'm not going to trade any of my accounts on the Nasdaq. I just kind of want to trade the Nasdaq for fun. I don't want to really think about if it's going to run a high or low or not. I just want to just take the trade. So I just keep my eyes on it moving forward. But I do appreciate everybody that joined me today. We will come back later on today, and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody, and keep on.